Hi, my name is Gokul Narayan, and I'm a faculty with the Asian School of Cyber Laws. And we have, as usual, Dr. Aditya Nain with us. And today, I'm not going to give too much of an introduction because I hope people know us. But what I am going to talk about is a slightly nuanced concept. It's nuanced in my head, understanding what mutual funds of the equity type are.
Okay.
And going into the various kinds of equity mutual funds. That's what I want to discuss today with you. So why don't you start off with a very basic introduction as to what equity funds are, and then we can take it into its various types.
Okay, so Gokul, an equity mutual fund is a mutual fund which holds or invests in stocks. So,
Okay.
stocks that are listed on the stock market, on the Bombay Stock Exchange or the National Stock Exchange, like publicly traded stocks. It could be a
Mhm.
Reliance Industries, it could be an HDFC Bank, it could be various others. So, a mutual fund that invests in stocks is an equity mutual fund.
Okay.
Uh, for those of you who want to know what equity itself is or what mutual funds are, we have separate videos on that, which we'll link to in the description. So check those out and then come back here if you think that's better.
A fund which invests in stocks of various companies would be an equity mutual fund. Um, uh, we'll try and distinguish this from in the next coming videos between what debt funds are and how they're different from equity funds and what do they invest in. So stocks basically is what we're referring to when we're talking about equity mutual funds. So what are the different types of equity mutual funds, Aditya?
Now, the simplest way to categorize equity mutual funds, and this is like industry standard, is between large cap, mid cap, and small cap, which basically refers to the market capitalization of the stocks
Okay.
that the fund holds. So to
Okay.
clarify this, some funds will only invest in what we call large capitalization companies, like, for
Okay.
example, a Reliance Industries or an HDFC Bank,
Okay.
which
But
means that these are
yeah,
the,
I was about to ask, what does that mean? Large capitalization, like,
yeah, so the market cap or market capitalization refers to the total value of the outstanding shares of a company. So
outstanding shares of a company.
yeah, so there are
Well,
various
what do you mean by
shares
that?
that people hold of the
Okay.
company, let's say of a Reliance Industries. These shares are bought and sold by people on the exchanges, and so each share is worth something, right? And this is public information what each share is worth. So when you take the total number of shares that are held of the company and then multiply that by the value of one share, you get the total market cap of the company. So a large cap mutual fund is simply a mutual fund that invests solely in large cap stocks. So we
Okay.
call it a large cap mutual fund because it invests in large cap stocks. It's as simple as that. If
Correct.
you had a
Correct.
mutual fund that invested only in mid cap stocks, you'd call it a mid cap mutual fund. Similarly,
Okay.
you have small cap mutual funds which invest solely in small cap funds. So the
Small
market,
cap stocks, you mean?
sorry, yes, small cap stocks.
But then how is the value of the fund different from the value of the stock? There are certain different terms I know that exist, and you told me about it, but I've forgotten right now. Could you tell our viewers about it?
Yeah, so when we talk about a mutual fund, investors are often keen to know, well, how much money are they managing? That means how much money have investors, let's say large or small investors, given to that mutual fund for them to hold, right? So that's called the assets under management or AUM. So in
Okay.
the case of a mutual fund, if you want to know how much money they're managing, you just have to ask, well, what's their assets under management? And the
Okay.
assets under management for mutual funds are all available as public information. So Gokul, there's a fourth type of mutual fund as well, which is called a multi-cap fund. Now,
Okay.
multi-cap fund is one that does not restrict its investments only to large, mid, or small, but it invests across all three categories. So it has some money in large cap stocks, some money in mid cap stocks, and some in small cap stocks. So for a
Okay.
multi-cap fund, you need to invest at least 75% in equities. So that means in stocks, as opposed to, let's say, investing in bonds, right? And out of that 75%, you need to be minimum 25% in large cap companies, minimum 25 in mid cap, and minimum 25% in small cap. So the SEBI has basically come out with these rules. in which you need to give an investor at least 25% in each type of market capitalization stock. If a fund is holding 100 crores, then out of that, 75% needs to be in equities of some kind. So that's 75 crores. Out of that 75 crores, 25% minimally needs to be in large cap,
Okay.
and 25% minimally in each mid cap and small cap stocks.
Okay.
Right. So from an this
So,
is
so
important.
25% of 75
Percent.
crores. So,
Yes. Yes.
so
25% of 75 crores.
okay. Yeah. Okay.
So look, this is important. Why is this important from an investing perspective? I mean, that's the point. Because if, as an investor, um, you want to invest in the type of equity or stocks that you are comfortable with. So someone with
Okay.
let's say a conservative risk profile may be a little wary of investing in small cap stocks, right?
Okay.
And so they may not want access to small cap mutual funds. They may say, look, I just want to invest in mutual funds that have money in large cap stocks and mid cap stocks. So for them, they should look at just large cap and mid cap mutual funds. Somebody
Separately. Yeah.
else may want a little more risk, and so they may feel like I want access to small cap stocks and I'll get those through small cap mutual funds. Someone else, let's say someone like me, may feel that I want access to all different types of sizes of companies. So maybe I'm going to put 40% of my money in large caps, 30% of my money in mid caps, and another 30% in small caps. Right? There may be another investor, let's say Gokul like you, for instance. Maybe I'm just an example, who says, look, I don't want to hold three different funds. Just give me one fund, and I want small, mid, large, everything in one fund. So you may go for a multi-cap fund. So different mutual fund companies have all these different categories of funds that they offer investors to make it easier
So,
for them to invest in.
in a completely generic way, because the market capitalization in a large cap stock is higher,
Yeah.
generally the company is supposed to be more stable in the long term, generally. And I'm talking in complete general terms.
No,
And
that's
since
true.
since the market capitalization in small cap stocks is below 5,000 crores, the the growth potential in that is higher, and so is the risk higher, and that's basic.
Yes, correct. So the larger the company, the less risky it usually is. The smaller the company, the more risky it usually is. That's a general
Yeah,
principle.
but also larger generally, again, I know you hate
No,
generalizations,
that's
but
okay.
larger generally equals to slower, and smaller generally
Yeah,
so like it is like a heavyweight wrestlers
yeah,
or a boxer is going to be a much slower deal unit to move, but
yeah.
very powerful. On
Hmm.
the other hand, a flyweight boxer is going to be extremely quick,
Yeah.
but then it's far more volatile as well.
If you're someone who's invested in only small cap funds, then you should be willing to take more volatility in your investments, which means more ups and downs in your investments.
Correct.
But you're hoping for greater returns in the long term because small cap funds have more upside potential because they're investing in small companies, and small companies have more room to grow. That's the way
Correct.
to look at it. Large cap
Correct.
funds gives you a sense of stability because these are proven companies with massive market caps, meaning that they're established, they're well known internationally, lots of people invest in them, so you can sort of feel more secure about it. But because it's more secure and they're larger, there's less upside room to grow as well, usually speaking. And so you can't expect as much of a sort of return, as high a return long term in a large cap as you can in a small cap fund.
So you go in for, you trade between security and opportunity. You want a more secure growth potential, then the automatic choice becomes a large cap. I mean, if you're willing to take a little bit of risk, then you go in for mid cap. And if you're
Yeah.
really willing to take but how risky is it to say that small caps are very risky, as in Is there a statement that can be made like that?
Yeah, so there are ways of mathematically calculating risk, Gokul. So if you, I'll put up a little chart which shows a couple of comparisons of a large versus mid versus a small in terms of risk. And it's usually
Okay.
calculated in terms of the standard deviation of the fund, or what's
Okay.
called sharp ratio. So I'll put that up, which it's basically a way to calculate how much the fund would move, how much volatility there is in the fund. So there are certain
Correct.
mathematical calculations that you can do to quantify how risky it is.
So that's it, guys. Basically, I hope this helps because this has reinforced whatever I thought I knew. Forgotten a little bit about it, but thanks, Aditya. It makes it a lot simpler. But in case you have any questions that you think are still relevant in terms of understanding what the difference between these three types of equity mutual funds are, feel free to write into us. And as usual, click subscribe, share, all of that. Bell icon, whatever. I can never remember all of that.
Thanks,
But
guys.
in any
Thanks a
case,
lot. But
thanks,
Gokul,
Aditya.
just one
Yeah,
parting thought. If
yeah.
investors are DIY investors, if they're managing their own money and they're confused which type of equity fund to invest in, the safest answer is diversify. That means either get one large mid and one small cap fund, or go with a multi-cap fund that gives you access to all different caps.
Mm. Well, there you have it. You've got an expert tip also for DIY investors.